Are you struggling to understand the concept of petty cash funds? If yes, then listen up. If not, then take a hike. Petty cash refers to a small amount of money businesses keep on hand for minor expenses, such as miscellaneous office supplies, and so they establish a petty cash fund whose operation involves three main steps. Step 1 is establishing the fund. This involves a business writing and cashing a check for a sum of money which goes into the fund, which is then placed under the care of an employee, the custodian. A journal entry is then made to record the establishment of the fund. This entry debits a petty cash account and credits a cash account, effectively resulting in no net change to assets, as cash is merely being relocated from one asset account to another. This brings us to step 2, making payments from the fund. The custodian now uses the fund to pay for qualifying expenditures. It is important that all receipts are kept as proof of purchase. However, no journal entries are made yet. This is completed in step 3, replenishing the fund. Here, the remaining cash in the fund is counted. The business then cashes a check for the amount that is needed to return the fund to its original balance. The cash received for the check is then placed in the petty cash fund. This is then journalized and the receipts used as documentation to record the purchases as expenses. The journal entry debits the relevant expense accounts and credits the cash account for the amount spent. This entry decreases assets as well as equity. This step is repeated every time the fund is replenished. However, at times, the amount needed to replenish the fund may not be equal to the total amount of receipts. This discrepancy is charged to a temporary account called cash over and short. This account can either be debited when the replenishment is greater than the amount of receipts, which thus increases expenses, or alternatively credited when replenishment is less than the amount of receipts, which reduces expenses. And thus, that concludes our discussion on the accounting concept of petty cash funds.